Today on Startup Street, lots of earnings coming in, and we're going to focus on e-commerce enablement platform Shiprocket, which has posted a 21% year-on-year growth in its revenues for FY24, even as its net loss widened to 595 crore rupees for the year because of a one-time restructuring cost, employee stock ownership plan, and investments in its emerging business. Now, the company says it has reduced the cash burn almost by half to about 100 crores, and it is on the path to full profitability for FY25, with the first 2 quarters of the current fiscal already profitable. So for more on these numbers and the outlook for the year ahead, joining me now is Tanmay Kumar, the Group CFO of Shiprocket. Tanmay, welcome to Startup Street and thanks for your time here. You know, this FY23 restructuring continues to impact Shiprocket's bottom line. Net loss has widened this in FY24 as well. Apart from this restructuring cost, largely, where is the drag coming from and what is the sense you're getting on turnaround now?
Thanks, Ritu, for having me here. So last year has been a phenomenal pivotal year for us in terms of expansion of our platform. We are on the path to build one of the most comprehensive tech stack for SMBs in India. And while you see this 21% growth, behind this is a growth of a fundamentally large number of emerging businesses in our platform, which have grown to 70 to 80%. We continue to invest in these technologies. We want to service as many SMBs in the country as possible. As we build this journey, as we invest in these businesses, that is where most of our money is going into.
All right. Tanmay, Shiprocket hopes to be profitable in the current financial year. We understand, of course, the first 2 quarters are already in profit, so that's half the job done. What sort of profits is your core business generating, and how soon is the emerging business going to break even?
So, Ritu, the core business, which is where we started 5 years back, which we are known for, the shipping and aggregation business, that fundamentally was profitable as back as FY21-22. So that business generates significant amount of profits. Literally, this year it should be close to double digits. So it is a fundamentally very, very robust business. We are using all of that money to invest in emerging businesses. There are a bunch of them like Shiprocket Capital, Shiprocket Quick. We are powering SMBs to export out of India through a cross-border platform. So there is investment going in. We think that we should lean on growth here and servicing as many merchants as possible, as opposed to very quickly going around and going after profitability. On an overall business basis, since we are already profitable, I think our focus on the emerging business will continue to be on growth.
All right. In that case, your revenues, those have increased by about 21% in FY24 over the previous year. What will FY25 look like in those terms? What will be the key growth drivers which will help you sustain the momentum and the fastest growing segments for you?
So, Ritu, the core business is continuing to see stronger and stronger growth year on year, which is fantastic. And we know that we have a proposition that is loved by small merchants. We have a tie-up with ONDC, we work very closely with DGFT, and therefore that part of business, while it is continuing to grow and it will be stronger than last year, which is great, the emerging business has much stronger momentum. I would see that business growing by more than 70 to 100% year-on-year basis.
All right. Currently you have about 1.5 lakh active sellers and an annualized GMV of about $3 billion plus. And that gets you 5% of India's e-commerce ecosystem, you say. Now, how are these numbers expected to grow, say, in the medium term? And also take us through what we're seeing on the quick commerce side. What sort of contribution is that going to have?
So we have a mission to power as many merchants as possible. We are aiming to empower close to 1 million SMBs over a period of time. And therefore, the runway on this side is huge for us to continue to be, ride on the digitization of Indian economy and participate and enable and empower every small merchant to directly service their small merchants. So that is done. Sorry, I missed the second point. What was the other question you had?
Well, it was on how the rise of quick commerce with various new categories being added there as well. How is that expected to contribute to your growth going forward?
So clearly, there is demand on that side. We have a product called Shiprocket Quick. That product is scaling extremely well. We are seeing huge amount of demand there. The offering is taken up very well. We are using that to empower again, offline merchants, offline kiranas and wholesalers do their business. So over a period, depends. I won't indicate any numbers, but that continues to be a key part of our strategy.
All right, quickly, Tanmay, before we let you go, we understand Shiprocket is looking to close a $75 million funding round at a flat valuation. If you could comment on that and how soon we'll see you do that.
So we are in conversation on that one, Ritu, and I won't be able to comment more than that. We are in conversation with funds and the process is ongoing. We expect to get that done, as and when it happens, we'll share updates.
All right, Tanmay, we'll wait to hear more on that. Thank you very much for joining us here today on CNBC-TV18. We wish you all the very best. Thank you.
Thank you. Thank you so much.
All right, with that, let's move to our... For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.